Good afternoon, everyone, and welcome to the Amazon and Apple earnings watch party. And hopefully today goes better than yesterday. Yesterday, we had two of three big companies sell off after they announced earnings. We had uh, Meta, Microsoft, Google report, and Google reported a very good report, by the way, one of the best I've seen in a long time. Amazon wasn't absolutely terrible. Just didn't meet what was expected. It sold off after they announced. Meta got sent to the principal's office. It failed. It got written up for spending too much capital, and investors on their investor call really asked a lot of questions with a lot of concern around, CapEx spend, and they don't really have a lot to show for it. Their default answer is, well, it's helping the core business, but there's no real new revenue. So today, as we get into Apple and Amazon, let's see how things play out. We're first going to see Amazon, and then we're going to see Apple. Now, Shadow Guy's already on. I think he's trying to stir up some controversy. Any predictions? I'll start, and then you follow there, Daryl. So
Okay.
I'm expecting Apple's going to come in as expected, and it should trade maybe give or take 1%. Amazon, I think, is going to have a very good report, and the stock's going to rally 10% higher. What do you think, Daryl?
I think Apple's going to do okay. I think the price will probably rise a little bit. Their sales really started coming in after their last report, and they've been ahead of schedule compared to previous releases. So I think they're going to do well. Amazon, I still have a few more questions on. I'm not quite as optimistic as you are. I am adding shares as I go, but I'm not as optimistic for this particular report as you are.
I don't need to tell you that it's all about the setup.
Yep.
And Amazon kind of got grilled on their last earnings. They got taken behind the woodshed and got beat up. I think they're going to come back and show that AWS is the king of cloud infrastructure, and they're going to show really good growth. They're going to show very strong margins compared to its peers. And it's going to show that, hey, we're the e-commerce leader. We also have all these other cool businesses. Like they have Anthropic, right? They don't speak very loudly. They don't boast about the stuff they have sometimes. And they have some pretty strong, other businesses that we don't think about. Their
Your
streaming business doing great. They
your
sell a lot of
prediction
ads.
was right, by the way.
So what's going on? Are they out?
Yep.
Give me the good news, Daryl.
They're up bigly.
I'm a Meta stockholder and I need good news. 10%. Bingo.
Look at you.
Bingo. Hey, even a broken clock is right twice a day. But it really was the setup, right? You had last earnings, they just got shellacked. So I'm sure the CEO is sitting there going, well, I don't want to go through that again.
Exactly.
Let's get to work. Let's build some things. Let's correct where we went wrong, and let's please the market. So I'm not seeing their earnings get popped on their website. What's funny is that we had two, I know for sure one AWS outage, and I think there was another one that was being talked about, not as bad as the first one. And their stock on those 2 days went up, which is funny. All right.
So their North American segment sales increased 11% year over year. Their international segment sales increased 14% year over year to 40.9 billion. AWS segment sales increased 20% year over year to 33 billion.
All right. So Put your report on your website, Amazon. Come on. Let's see if I can get this thing to refresh. Okay, here we go. All righty. So here is the report. Net sales, 13% growth. I think the consensus wanted 14. So interesting. North America, 11%, international, 14. AWS, 20%. The number,
Yep.
and I shared this with Daryl before we streamed, was 18.5%. They needed to be above that to impress the street. And this is the most profitable part of Amazon. So mission accomplished. They are the kings of that data center. And as we look at AWS, I'll show you how they compare from a revenue standpoint to Microsoft and Google. Kareem Biggins, great to see you. Mike, I am with you on your prediction tomorrow. All right. So let's continue on here. I wanted to look at, see if they can break out margin on their data center business. They're also probably going to highlight their advertising, because advertising on their e-commerce site as well as in their streaming sites, that's like all margin, which is, lovely to see that grow. Okay, so we have cash flows. They put cash flows first. Interesting. Okay. So trailing 12 months cash flow. Net income. All right. So cash from operations really jumped from 112.7 billion up to 130.6. Purchases, CapEx. Wow, man. Now, this is the big jump for the whole year. Let's see how the quarter looks to see if we can establish some type of trend. So you see that they're putting a lot of money into their business. So for the 3 months, it jumped about 12.5 billion for the quarter, year over year. Okay, so they're spending on that data center, but they have the growth to show it. 20% growth is very, very good. Okay. Their earnings per share, I'll look at earnings per share later. Okay, this is the breakout I wanted to take a look at. Okay, so AWS. So this is 3 months and then 9 months. So AWS for the 3 months. So how is that 20% growth? Oh, no, that's the operating income. Okay, so this is the 20% growth, operating expense. So from a margin perspective, they're at roughly about 33, 35% operating income margin. Google isn't that high, by the way. AWS is more profitable than Google Cloud. Google Cloud announced yesterday they were at like 27%, and AWS has better margins than Google Cloud. Nicely done, Amazon. Looking at their 9 months ended September 30th, the profitability looks good. If I do some back of the napkin, they're at 36% margins. So that margin difference is an advantage AWS. It shows that they just know how to do it better. They've been doing it longer than both Microsoft and Google. So they are more profitable in that space. Nicely done. This is a big part of the value of Amazon, is this section, because it drives so much profit in cash. Okay, we're good there. Balance sheets, I'm sure the numbers are where they're supposed to be. And let me see, how would they describe it? Would it be advertising? So okay, here we go. Advertising services. So it grew by 22% for the third quarter. Very good.
Yep.
That's very good growth. This is all like gravy. $17.7 billion. Okay. So it looks good. Looks really good. Stocks trading higher by 8.5. Good news. The analysts, I guess, for the full year, for the quarter, they expected 14.11%. So that's why I thought it was a little bit of miss on the top line revenue growth, but AWS kind of carried the report. All right, good earnings. Could you show the charts on Amazon?
Sure. We'll look at a couple different charts. I'm going to start with a really long view. This will be important here in just a second. So I've got about 19 years worth of data here. And we have this trend channel established where we've connected a couple of lows here over this time frame, made an exact copy of that line and connected as many tops as we could. and just for reference, I made a line dotted, put it in as close to the middle as I could get it, just so we could see where it was trading. So we can see that Amazon has pretty much traded in a channel for the last 19 years, sometimes trading above it. We had one period where it actually traded below that average, but we're trading slightly below the midpoint at this time. Now I'm going to step into a 5-year view. And this one is a little less exciting, something to be a little bit concerned about. So I have an auto resistance line here that over 5 years has been tested as resistance twice, 3, 4 times, and it's acted as support 2 times, and it actually broke through it in April, which I think for purposes of this discussion, we can pretty much rule that out because
Right.
that was an event that happened.
Correct.
But one of the things that concerns me about Amazon, and I'm an owner of Amazon, but they have fallen out of this 5-year trend channel. That happened in February when the tariff talk first started, and we thought it was probably going to be 10%, somewhere like that across the board. Then we got the April 2nd announcement and found out it was a lot worse than that. They have since recovered, but have not gotten back into that channel just yet. And we have another line here that's been tested as resistance 2 times, has failed to break out. These are the last 2 highs that we have, the only 2 highs that we've had in Amazon. So it has yet to even break out above that level, unlike Google that we looked at yesterday, how many times it had broken out above trend lines. This one is struggling a little bit at the moment. If they trade to 241, that'll put them above these. That'll put them right at these highs again. So that could be a battle point. Then let's step in just a little bit, and now we'll just look at 1 year. And we have another trend line from that April low. I went ahead and set it to that April low, even though this was a tariff event that affected so many companies, and they pretty much came out of it. But that's the trend that I'm looking at the moment. It really needs to hold that trend. If it breaks out through this trend, that would be concerning. So we got the report. We know they're going to be above. They're probably going to break out above these highs. We'll see if they can hold that. So they do have a positive RSI sitting right at the midpoint. That's
Mm-hmm.
about as close to being undecided if you want to be a bull or a bear as you can get. The PPO is positive. It moved into positive territory about 3 days or so ago. The accumulation looks really good. So it's been up and to the right for pretty much most of the year. We did have a couple of blips. You can see here in the money flow where it went negative. But as you can see, for most of the year, the money flow was positive. Over the past year, they have barely outperformed the S&P 500 by less than 1%. They're barely outperforming the discretionary sector at 1%. Broadline retailers, they are outperforming their industry group by 2%, while that industry group is underperforming the S&P 500 by a little over 1%. That's why I was a little bit cautious. I'm glad to see that they reported. I'm a shareholder, so I'm glad to see this news, but I was a bit cautious coming into
Mm-hmm.
the report.
Yeah, Amazon, um, they don't apologize for this. Is they will run their business with the intent to become just better at delivering to that customer, to providing what the customer wants, just being obsessed with the customer, being obsessed with the business and trying to make the business stronger, more efficient. That's why they do their own deliveries. That's why they have over 1 million robots in the warehouse operations, and they're just obsessed with it. And they are willing to let the stock struggle at times because its fundamentals will look terrible.
Yeah.
But the big picture is what I try to focus on is the AWS business is the biggest in the world. And I asked Gemini's assistance. AWS for 2024 was at 107 billion in total revenue. Microsoft 75, Google 48. Now these are growing a little faster, right, than the 20%. But 20% on 107 billion, that means their cloud business is going to grow by $22 billion. So there'll be $130 billion revenue cloud business at 35 to 37% margins, operating margins. It's exceptional. They have better margins than our friends at Azure and better margins than Google Cloud. So that's just a strong, strong posture for Amazon. And they're going to continue to make this business better. Their CEO ran AWS. So he knows AWS. It was his baby. The CEO was a direct from college hire. So he's been there his whole career. He only
I do
knows
have
Amazon.
a news alert. Netflix just announced a 10-for-1 stock split.
Oh, okay. So it'll just, yeah, it's a good idea. That stock was, the stock price was really high. All right. So I think you mentioned that Apple would be announcing or releasing their announcement around 4:30 Eastern, right?
Yes.
All right. So I'll just double check. All right. We're still there. Okay. So Amazon, this stock has not performed all that great. It's lagged the top 10 most valuable companies. This is the laggard, and it just hasn't gone anywhere. And we did have that big sell off that the market took, and it ended on April 8th. You see that Amazon was still struggling. It struggled a week and a half after that moment, and it's just never really, performed the way Nvidia, Meta, although Meta had a terrible day today, and even more recently, Google and others. So this one is really lagged. But if they're beginning to, get the investor to understand their big picture, I think they're going to be going up much higher. Just to add one more business, Amazon has Robotaxi. They have a company by the name of Zoox, spelled with an X at the beginning. And they are operational in Las Vegas. They were testing in Austin when I was in Austin this summer. So they're going to be operational with Robotaxi. They're in on Robotaxi, and they're ahead of Tesla. If you measure how many cities you're actually giving people rides and not saying you're going to get rides. Google is ahead of everybody with their Waymo service. Amazon with Zoox is there. They've got a couple of cities that they're live with, and you could expect that business to go more to scale in, I guess, 26, 27, 28. And we'll see how that goes. The business, the stock price hasn't worked all that well. Now, the business has been growing, and we saw that the growth rate is accelerating. Isn't that exciting? So it helps when you have a cloud infrastructure business growing at 20%. It helps that growth rate. It helps when you have all that streaming advertising that is super high margin. That's going to help the growth rate. And it's really good growth. It's organic. It's margin growth. So that's a very, very good number. Amazon, I believe, is the biggest revenue company in the US. And at some point, these guys are going to be a $1 trillion revenue per year company, which will be incredible. Overall, their margins are good. 52% on a business that big is good. Profit margin is good. And their free cash flow, they're putting that cash into that data center, and they're putting it into Robotaxi, and they're putting it into a variety of things. They're even testing delivery via drone. I don't know if you've seen that service, but that's where they're going. They're also testing out giving AI glasses. They're issuing AI glasses to its delivery drivers. Its delivery drivers will be wearing AI glasses, and those glasses will help them do navigation and deliver packages and so forth. So obviously very forward-thinking, technology-based company. Analysts, 46 of them, they think the stock's discounted. I agree with them. 19.55% is the discount. And that's a lot of analysts weighing in. The downside risk isn't all that bad. 195, upside 305. And the forecast, we're expecting this year they're going to grow at 13%. Next year by 10, 10, 10. And they will start knocking on the door of $1 trillion in annual revenue, which they may be the first company to do that. So the earnings per share will grow. That growth rate looks fantastic. And their forward PE, next year, their PE can come down to 28.6. That looks like a good PE. Of course, the stock goes up 10% tomorrow. It's going to be a little further away from that PE ratio. Mm-hmm. But I think over time, the stock price is going to rise. The PE is not going to get down to 19.7. This business is way too valuable to be down in the low 20s. I would say that I don't think this stock will trade below 30 PE, and it'll trade up to a 40 PE because they just have such a lead on everybody else. E-commerce, they have a lead on cloud infrastructure. Those are where they're very dominant. Then they have these other businesses that are really going to do well and help them. Last comment I'll put out there is I was watching the World Series. Dodgers lost to the Blue Jays. I'm an LA Angels fan, by the way. So no tears were shed when the Dodgers lost last night. And I saw an Alexa commercial with Pete Davidson, the actor. And they're doing an Alexa reboot. They're trying to get that as an AI play. If you recall, Alexa, like 15 years ago, they were going big, trying to get into our homes and have a chat device that you could speak to. And hey, Alexa, what's the weather? Hey, Alexa, order something on, Amazon for me and that kind of thing. Well, they're trying to reboot that. We'll see if it works for them. Looks like Dre. Yeah, I was talking the other day on a stream and I was on Kalshi or Polymarket. And I was like, hey, the Blue Jays are the underdog. Maybe I should pick them. And they won. That was like on Tuesday night. I'm
Gotta
like, man, I
love
should
that.
have made that bet, but oh
Yeah.
well. So what are any other thoughts on Amazon, sir?
I'm rooting for them. They show up at my house almost every day. So,
I know. One of the things that a new guess problem is I have so many darn Amazon boxes. I feel bad because my recycling bin, we have recycling bins here in Southern California. I'm always filling it with boxes and I'm like, geez, man, is this bad for the environment? Because I'm like you, we're having stuff delivered every day.
they've done a pretty good job at minimizing, containers over the years. I've watched what they're bringing to the house, and a lot of it has gone to smaller plastic packages, which I don't know if that's any better. But the cardboard has seemed to stay just as strong, but is getting thinner, where the corrugated material on the inside is much thinner. But the box still seems just as strong. So I know they must be putting some R&D into that, because of the same concerns that you just expressed.
Yeah, and I've seen like their drone delivery. It's there's a lot of things where I've initially have doubted that new idea is going to work or not. And with the drones, I'm like, is that really going to be cost effective? You know, and I so there's a good level of doubt over the drone delivery. But that's the one company that can pull it off. And next thing you know, it's like, what? Like for maybe some high value items, like, hey, you know, I need a new iPhone. Boom, drone shows up within 30 minutes and delivers an iPhone. It's like,
Yeah.
whoa, man, that was incredible. Delivers it to your backyard or something. That'd be really cool. All right, so we are waiting for Apple to announce their earnings. I have not seen any news on Apple, but I think within the next couple of minutes, we're going to see them report. And I am on their website seeing if they're going to drop the news on us. I believe it's going to be their fourth quarter. And just to kind of take a look at what we're expecting, Apple is for the fourth quarter ending September 30th. We're expecting $104 billion of revenue. A lot of iPhones in that number. Revenue growth at 9.78. So if they could beat that number, the market will be very happy. And their earnings are really growing. I don't know, about 87%. We're going from 1.57 to $1.80. And then Daryl, you're getting a request on what your channel is. If you can put a link on the chat.
I will.
All right. So that's what we're expecting from Apple. They have been really improving their business. Their growth over the last, 4 or 5 quarters has been positive. And this is a company that was having a growth problem. They had negative growth numbers a couple of years back, and that was bad. Like in fiscal year 2023, and then in fiscal year 2024, they had a couple of quarters there where it was negative. So it looks like they're back on track of growing their business. It is a big business, $104 billion for the quarter. And if you annualize it, they're gonna expected to do 422 billion this year, moving to 448, 476, and so forth. It is a good revenue, I should say, a good margin business. Let's take a look at their margins. Take that back. 46% margins, not quite as good as Amazon. Amazon has better margins. Google has way better margins. Microsoft, better margins. And these guys have 46% margins, but they have improved them over the last couple of years. Now, if we get those ugly tariffs on iPhones, that would not help them because their product costs would go up. But the other, metrics, the profit margin has been very good for them. Free cash flow margin, very good. So go Apple. All right. Any news on Apple yet? Apple just reported. So let's see if they dropped it on their website. Not yet. Two hours ago. All right. So Apple.
Ooh, we're down though.
So where's the numbers? I don't see the numbers on this report. So I guess CNBC doesn't have the information yet. So they're down a little bit. Not too bad. One down 2%. Let me know if you get your hands on a good press release.
Okay, I'm waiting as well. They had an implied move of plus or minus 3.7%.
Mm-hmm.
Okay, there's Apple.
So you have some numbers?
I can.
All right, let's take a look at the numbers.
I'll look at this summary here first. So they beat on EPS and they beat on revenue. They declared a dividend. iPhone sales were 49 billion. Now let me go to the press release and I'll let you drive from there. Let me zoom up here.
All right, so
what do you want to see first?
see if they get us down to a nice schedule. All right, here we go. So it looks like the growth for the quarter was about 3.7 billion. So that is product sales was about probably about 5%. Their services business went up more. That one was about 3.7 billion. So that's probably about 11-12% growth. So the iPhone growth, not as good as I think investors would have liked. Maybe that's why the stock price is under pressure. So cost of sales went up a little bit as you're selling more units. That's understandable. Okay. So I think it's the product sales were not good enough. And that's where investors are not liking the report. I think that's all I need to see. I wanted to see their top line growth and see where that's kind of landing. Everything else is kind of mechanical over at Apple.
China sales were down, it looks like. That was to be expected, I think.
Mm-hmm. So my wife got an iPhone like 3 weeks ago. So she helped. She did her part.
So that's the only region that actually decreased.
Mm-hmm. And it's not one of the big regions. So iPhone sales went up. Mac sales went up. iPad is flat. And
Well, I'm
service
going to
was
be contributing to that this year. My last iPad was 2019, and it's starting to show its age.
Ah. Well, I still don't have anything on their website, which is interesting. So they're guiding that they should have a big December. Apple is expecting to have a good quarter. Yeah, they just barely beat on revenue. But the iPhone revenue missed. Let me share my screen for a second.
Okay.
So the iPhone revenue missed. It went down. So 49 billion versus 50 billion estimated. So they didn't sell enough iPhones. Now, we talk about these other businesses like Amazon, right? They're just relentless. They didn't stop at e-commerce. They started AWS. Now that's a flourishing business. And they didn't stop there. They have robotaxi. They have drone delivery. They have the advertising business on e-commerce. And so Apple, I don't observe the same kind of constant innovating, outside maybe the revenue lines that they currently have. It just seems like they're just trying to get more revenue out of the same business, which is the iPhone and the iStore, right? So their Apple Store. Now, I'll be the first one to say that's worked, but just to compare, like let's say Google search, it continues to work, but Google's not stopping there. They've got their cloud business. They've got Waymo. They've got YouTube. They're growing YouTube. YouTube is a monster now. And they've got a bunch of other businesses that, I could list out for the next 20 minutes. Apple just doesn't have like call it a bench, an innovation, kind of testing ground or innovation engine that's going to come out with the next awesome product. Like, whoa, what's going to be the next thing? The wearables business, Meta's doing some interesting things with the wearables business, with the glasses. Now Apple's jumping in there. So they're a little bit late on that. We'll see if they pull it off. It looks like the stock is picking itself up. We had seen it under pressure, and now it's kind of a little green. So $4 trillion market cap company. I have not been an Apple investor. I just look at these numbers and I'm like, man, I just kind of talked about kind of high level qualitatively. Apple just doesn't draw me in as one of the great companies, one of the great businesses. They lost their founder, Steve Jobs, a number of years ago. And now they have a very good business administrator, but there's no like real, innovator at the helm. So gross profit has always been okay for Apple. The free cash flows have always been awesome for Apple. They do generate a lot of free cash flow, and that's what's made the company really valuable. But at some point, if there comes a day when users fall in love with a new device, it's going to be doomsday for Apple. I don't know when that's going to happen. I don't know but I think it will happen someday. We're going to go to another form of a device. Would be surprised if we're still with the same type of device in 5 to 10 years. So just some more comments there. I think we went over their growth rates. 28 analysts cover them. Some analysts believe it can go higher to $320 a share. But those concerns, I think the ones that I have are shared by others. I've had Apple price too high for some time. And their stock has gone up, to their credit. Their stock's gone up 8.41% this year for 2025. And for a while, it was really lagging, but now it's not kind of in last place. That title goes to Amazon. That's like at 1.64. Well, geez, like Nvidia's up 50% and others are up, quite a bit. So we'll see what
that 320 price target would actually be supported by the technicals as well.
Yeah.
Yeah.
Why don't you show the technicals on Apple?
So this is, let me annotate here. This is a fairly large base here. I didn't draw that very well. This is a pretty sizable base. And then we do form a handle here. So like you've seen me do many times, if you just take the price of this right rim and go find the bottom, I'm not going to use these bottoms. I'm just going to use like 193. And then you just add that price back to this right rim. And that would give you the target price. Now this one is a very large base. A lot of these cup with handles form more quickly. So this one could take a little bit of time to get up to that price. But it is the technicals are supporting a target of that price.
And now Apple's up 1.49%. So it's going up in after hours. And so is Amazon. Amazon's up 10.6%.
Let me look at the seasonality for Apple.
And by the way, we have 380 people on the stream. Thanks everybody for joining. If you're new, thanks for giving our stream a try. We are doing a live stream watch party for Apple and Amazon. And to all the regulars and all you members, thanks so much for tuning in. Really appreciate your support.
So I don't know what they were up in October. We could go look real quick, but November is about a 3% month, about 62% of the time. It looks like July is their strongest month. Followed by August. So July and August are their biggest. I was thinking the holiday season would be pretty good for them, but it's not supported by this seasonality. Well, you want to look at the charts from yesterday's reporting?
Yeah, I think it'd be interesting. Well, first, before we do that, let's check the chat, see if there's any questions on either Amazon or Apple. And then we're going to move to the big stocks that announced yesterday and see how they're performing since they announced. So again, hi Shadow Guy, Mike, great to see you. Cream Biggins. Yeah, Benton, good to see you. Amazon's a winner tonight. Good to see that. We have technically two winners because we have Apple up and then we have Amazon up. Yesterday wasn't as fun. It was like one was really miserable, Meta. One was not doing well, Microsoft, and one was a big winner, Google. But tonight we got two winners. All right, so some investors are wishing Amazon could dip to 170. And I've been.
Was that Amazon or Reddit?
Was that Reddit?
I thought that was a Reddit comment.
Oh, okay. Yeah. Yeah. Sorry about that. Reddit has been selling off. It's under pressure. But one thing I'll add on Amazon, this has been the stock that I've probably talked about most for the last 3 months, and have been buying more Amazon shares than any other stock over the last 3 months. So I'm glad I did that. And it's really the big picture on Amazon. The big picture on Amazon, you have to kind of understand that the fundamentals are not going to get you to the full understanding of the company. And I'm trying to buy a little fraction of a company, understanding what they're going to do in the future. So that whole qualitative process has a lot of meaning in my valuations. And I still value the stock as being discounted, but it has been the stock. And before that, like 6 months ago, the stock I was like a little bit nuts about was Google. And that really played out well. I'm not buying any Google stock at this time. I own plenty of shares, but Amazon is one where I would like to own a lot more Amazon. I was buying a lot of Amazon. The market was giving me good pricing. I'm probably not going to buy any shares tomorrow. I'll let the price kind of settle down a little bit. But I could, right now, I'm at over $100,000 of Amazon stock. I'd like to get it to $200,000 maybe over the next 6 months, and we'll see how that goes. All right, so let's see here. So we got some good comments on your channels relating back to Amazon. Nice work on Amazon, Daryl. Looks like, yeah, we talked about the Blue Jays. Apple just reported. Perfect. All right. So we don't have any questions. So let's go over the charts. If we could look at, I think we had the problem child is Meta. This one here, down 11.33%. They really we're getting grilled. And I created a video for the members of the community. It really talked about how on the investor call, the questions that were posed, every single one was around CapEx and the concerns around CapEx. And it's no secret. You're spending too much on CapEx and you don't have anything to show for it. So either you start showing the result or stop spending so much CapEx was the conclusion. Can you show the chart on Meta and try to interpret what's going on and what's going to happen?
So they did close below the 200-day moving average, which was increasing. And we talked yesterday that over the past 3 years, that they've only tested that basically just one time, excluding the tariff stuff that we had going on here. So it probably was about time for them to do a test of it. Look at the volume. The volume was absolutely huge today. Looks like...
I have a comment on that when you're ready.
Okay, go ahead.
People were sitting on huge gains.
Yeah, exactly.
Because if you bought Meta at $100 a share and it's way up at 700, 800, you're probably sitting there going, you know what? I don't know how much it's going to drop, but I'm going to go ahead and ring the cash register.
Yeah, so there were 87 probably million shares traded yesterday, and the 50-day moving average is about 12 million. So it was a pretty sizable.
And when you say yesterday, you meant today during
today, yes. Yep, today. I meant today.
Yeah.
One thing I neglected to point out, and I apologize for doing this, because we review these a lot, and anytime I do a earnings preview, I show these in all of my earnings previews. So I'm surprised I didn't talk about this on Monday. This was kind of a warning sign going all the way back to the beginning of August that Meta was so underperforming the internet industry as a whole. So I apologize for not mentioning that on Monday. Meta is just not one that I follow all the time. So when we looked at when I looked at this originally, I didn't think too much of it, but this is a pretty big warning sign.
Mm-hmm.
Other than that, there's really not a whole lot to say. They are below the 200 day at the moment. So let me turn back on my cursors and see if we work. This is support from back in May. So what is that, 650 or so? And if it breaks down below that, then we've got another double top over here. So we could be looking at 629 based on the PPO. Now we had a bullish or bearish crossover today in bearish territory. So it would not surprise me to see us get down to around 623 or so.
Mm-hmm.
So that's Meta.
Yeah, and just a quick flyby. Meta is up in after hours. It's up a tiny bit, 0.89, trying to get some of that big loss they had today. I mean, this stock really makes an impact. 11.3%. When they started the day, they were more like an 1.8 trillion, 1.9 trillion dollar market cap company. So they lost, I guess, about 180. No, that'd be too much. Maybe 160 billion dollars in market cap today. It's a lot of money leaving, like you showed the volumes of stockholders leaving. The P ratio did come down to 29. And I don't know if this is updated, but the P ratio definitely is going to get better with this lower stock price. Discounts are going to get better. Overall, I think this business is going to be fine so long as they don't keep, putting a lot of capital into the data center and not having anything to show for it. The market did not like the explanation, which is, hey, we'll just spend too much. And even if we're not going to use it for an AI workload that is in the form of a new business, we'll use it for the core business. It was like, no, that's really bad management. Why would you do that? Buy as you need it, be cautious with your capital, and actually our capital. I'm a part owner in Meta through my shares. So the market really did reject a lot of the messaging management had. Hopefully they got the message and they're going to adjust and they're going to get better for the next one. All right, let's go over Microsoft if you wouldn't mind.
Okay. So Microsoft did trade down below their 5-day moving average, which was increasing and still is increasing. They held their 20-day moving average, so that's really good news. The 20-day is just a little bit above the 50-day at the moment. So we'll want to watch this pattern here and see if it starts mimicking this pattern.
Mm-hmm.
But for the most part, as long as it's hanging on to this 20-day moving average, that's pretty good news.
Yeah.
PPO got a little stronger today. RSI is still above 50. You'd want to see this hold. You can see right here where my crosshairs are.
Mm-hmm.
That's a RSI of about 40. So when it does pull back, you would love to see it hold that 40 line and then start improving from there.
Mm-hmm.
If it dips all the way down into a really oversold condition, then you usually see some pretty steeper price decreases.
Thank you. And one thing I heard on Amazon, Microsoft is like something like 99% of analysts have a buy rating on Microsoft. Like everybody's in on Microsoft, which
Their volume was about 2x today.
Wow. And the volume was 2x. The stock settled down close to 3%. It's trading down a tiny bit in after hours, but just a tiny bit. It'll be interesting to see how Microsoft um, operates. They have a lot of things going for it, but boy, it is priced. It is priced to do a lot of great things. And I don't feel that the Microsoft business is as good as the Google business, nor the Amazon business. I think Microsoft does have some legacy businesses, like its software businesses, that are getting a little long on the tooth, a little old, not as innovative, and they didn't create their AI strategy. They didn't invent it. They partnered into it through OpenAI, and that may work out okay, but it may not. And I've also heard their Copilot business. They were very quick to get that out there, but I don't think users like it. I think it's kind of left a bad impression on users for the most part. And this stock,
That's not uncommon for Microsoft. I was a software developer for years, so I've seen a lot of their early products, and they were always sometimes a little painful. So that's not uncommon for them.
exactly. I've heard that some customers are pretty disappointed because it's created more, like, if you think about the people who make decisions on technology at a corporation, they buy the technology, they release it out to their users. Well, those users hold the people responsible for how good or bad that product is. And some of these CIOs have been getting a lot of negative attention within their companies. So we'll see how it goes. So that was Microsoft. And then the one that did make it through the day in the positive was Google Alphabet. And it looks like they're rising after hours. This stock has done really well this year. And you could have picked up Google shares, 6-7 months ago for about half off. It was the half off sale that the stock market was having. And I took the opportunity to get Google shares at half off. I bought Google. I talked about buying Google. I had good conversations within the community where I had some pushback from some investors. And I'm glad, because it made me double check all my analysis, my research, and that's the way it should be. We should express our point of view and say, I don't agree with that. I think it's this way, or I think Google's done. And I'm glad I had that pushback because it made me double check everything. But I did buy, and I've invested more into Google stock than any other stock in my portfolio, and it's worked out nicely. So, can you show us the charts on Google, sir?
Yeah, so they did create a black candle today. What that means is that it opened above the close yesterday. So it opened at the high and then it drifted lower throughout the day and ended up closing at 280, 281 today. That black candle typically means that you'll probably get a little better pricing here in the next few days.
It means the stock is going to come down
just a little bit. I don't think it's going to crash or anything like that. I'm not saying that. So let's just go to Microsoft. Again, I showed these black candles yesterday. Now, in this case, it actually continued on a run, but it did flatten out for a couple days. So if you see the next few trading days of Google doing this, you might not want to wait. Here we had a black candle. This is Microsoft now. We had a black candle and we actually trailed lower. We had a black candle and we're trailing lower.
Interesting.
So well, that just basically means people were exuberant in the morning and then they got double thinking about it throughout the day and brought the price down. Or market makers came in and took advantage of retail traders that bought too high. So just keep that in mind. If we go for 2 or 3 days and it just trades a little bit sideways, then I wouldn't wait much longer. I'm going to be buying some shares. I'm going to follow my own advice here because it is broken out 1, 2, 3, 4, 5 times. And it is broken. It's in a breakout right now. So if it just trades sideways, tomorrow will be important, Friday. And if it goes maybe Monday or Tuesday and we're still sitting right here, then I will probably pick up a few more shares myself. And then I would have a pretty tight stop loss on it, probably down around 270 or so.
Excellent. Thanks for the research on this.
Okay.
All right, perfect. So we've made it through the agenda that we had. Quick glance, Amazon's still up nicely, and then Apple is up 4%. Maybe what they're saying on the earnings call is what investors want to hear, or at least the analyst. So looks like we may be headed toward a positive day tomorrow. That'd be nice. Today was kind of a crummy day, and I guess too early to tell. We'll see where we trade tomorrow. Tomorrow will be the last trading day of October, Halloween, and we'll see if the market can keep this gain over the last 30 days, or if it's going to settle down tomorrow. But so far, it's been an excellent year for investors. The S&P is up 16%. That's a very good rate of return for the year. And we still have November, December to go. And over the 5 year, it's been a terrific rise. And we've had a couple of things going on in between. Like we had the big sell-off this year. We had a bear market in 2022. Even with that included, over 5 years, 111%. So being a stock investor has been a very productive endeavor for sure. And as we get better and better, we make more and more money and have more and more fun. So that's going to conclude our live stream. Thanks so much, everybody, for joining to examine Amazon and Apple, their earnings, how the market's reacting to it, as well as what we looked at yesterday. Daryl, great work today. Thank you, sir.
You're welcome. Let me show you one more thing.
All right. Bonus round.
Yeah, I did mention this on Meta. So here we have Google. They're in the same industry group. So what we saw with Meta, instead of going up, Meta was going down. So that's the point I was trying to make earlier. Meta was simply not keeping up with the internet industry group.
Yep. Good point.
I just wanted to show the difference between those two because we talked about it with Meta, and this is a good example to see it the other way.
It sure was. Thank you. All right. So that concludes our live stream, everybody. Have a good evening. Enjoy your Halloween tomorrow. Have a nice weekend, and then we'll get back into it in November, and we'll see if we can close out this year not at 16% higher, maybe 20%.
Yeah.
And it'd be great to have you guys join our streams often, as well as come to our channels, be a subscriber. If you see a lot of value, you can be a paid member on my channel. I provide a lot of content to members. Like today, I provided 3 videos that were just for our members with my research on 3 companies that we talked about today. And I'll be doing the same tomorrow. I'll be doing research on Amazon and Apple, going deep on both of them, and then releasing it to the paid members of my community first. And maybe about 30 days later, I'll release it to the general community. So consider visiting our channels and see what level of participation you want to be at. If it looks like somebody wants your channel again, if you want to pop it into the chat, we can get you, or we can get another person over to your channel. There we go. So everybody, thanks again for tuning in, and really appreciate it, and have a good night.
Take care, everyone.